I'm going to make this really easy for you though. There are only two market conditions that you need to pay attention to. The first is a trending market, or what we're going to refer to as a fast market, because the trending markets tend to move faster. The second market condition is a non-trending or ranging market, and this is going to be a slow market condition. The market will always be in one of these two phases. It will either always be in a trending phase, or it will be in a non-trending or sideways phase. So your first order of business when you look at a chart is you need to decide, is the market trending or is it non-trending? That's the first question you need to ask. All right, so what do you look for? What does a trending market look like? Well, in a trending market, we're going to have big bars. There's going to be a lot of big bars. There's going to be very little overlap between the bars. They're going to keep stepping higher or stepping lower. There's going to be very small wicks or tails on the bars if you're using a candlestick chart. Or another way of saying that is the market is going to close near the high in an advancing bar, or it's going to close near the low in a declining bar. If you are trading intraday, you're also going to get the feel of a breakout. The bars are going to be printing rather quickly. You're going to see the price action try to push the bars higher or lower. These things are all going to have some momentum to it. And it's just going to have that breakout kind of feel to it. Here's a screenshot of a trending market to characterize what I've just described. You can see here we've got this is a downtrending market obviously. We've got some very big bear bars. Those are the black ones. You can see we've got large bars, low closing prices with the exception of maybe one or two bars. Almost all the closes were near the low on those black bars. Very small tails on those bars. So if you look at a chart like this, and you see all these black bars and all these low closing prices and all these strong bars, you should be thinking momentum. You should be thinking, hey, we're in a downtrend. This is a trending market. It's heading lower. So how do you trade a fast market or a trending market? Well, the challenge is not so much picking the direction. Rather, the challenge is where do I get in? Because the market is fast, it's probably moving quickly. You're probably going to be struggling to find the right spot to enter your trade. Well, if you're watching a market that's developing quickly, if prices are moving fast, I give an example here of 3 or more big bars. You get the Japanese charting, I believe they call it a 3 soldiers, where you get 3 big white bars or 3 big black bars forming. That's a very strong trending signal. Just get in anywhere. Your objective is to get in because you're suspecting that the market is starting to trend. You don't want to be left behind, so just get in. It is important, however, to use a proper stop. A lot of traders drop the ball on this issue, and this is perhaps something we can discuss in a future webinar, but there is such a thing as a proper stop for a trade. What I see a lot of traders do is they will throw a stop just behind the last bar. They'll only give the market 1 bar to retreat against them, or they'll use some sort of monetary stop, maybe $100 stop or $200 stop, whatever. Those kinds of stops are likely to get tagged. To use a proper stop, you really should keep your stop above the previous swing high or low, depending on whether you're buying or selling, of course. This is another reason for trying to spot a trending market early, because if the market starts moving too far, you're going to find yourself with a very, very large stop, and you're going to have to adjust your position size accordingly so you don't end up risking too much money. But if you use a proper stop, you'll be able to ride out any little intermediate swings as the market starts to get some momentum behind it and continue with its progression, with its trend. But I just wanted to point that out because it is an important concept, something a lot of traders overlook. Another way to get into a trending market, of course, is to wait for the pullback. This requires a lot more discipline, and sometimes you're going to find that you wait too long because the market will already have advanced too far, the pullback will be insignificant, and you essentially have to write off the trade because you're getting in too late. But waiting for a pullback is an ideal situation to get into a trade on, and I'm going to show you that. The key to trading pullbacks, however, is only to stay with the trend, because very often pullbacks will have very enticing counter trend setups. You want to avoid those because if you're in a market that's making a trending move, if you're in a market that's breaking out, you're not going to get a big counter trend move. So remember to stay with the trend side. And because it is a trending market and you're expecting the market to be moving fast, moving a little bit further, this is probably the kind of trade where it's a good idea to have a runner in play, or perhaps swing part of the position, take a profit on some and swing out the rest of it. Try to hold on for a bigger profit. Okay, here's that same chart. So we've got the first pink triangle that you see there, where we have the three big bars kind of heading lower, and at this point you might be saying to yourself, it looks like the market might be trying to break out of that trading range that preceded it. Well, if you waited for the pullback, you can see you got a nice little pullback, the market broke down to the downside, made another move lower. If you weren't convinced off the first 3 or 4 bars that printed, certainly those 8 bars that headed lower should be convincing you right now that, hey, this market's in the downtrend, I better look to short. And you can see you had a couple other opportunities there to get in on the short side and take advantage of yet another move lower into the close, actually, of the E-mini on this particular day. So that's what it's going to look like. This is how you're going to trade a fast-moving, trending market.